Hello everyone. There's been a complaint from some of you who view our content and are learning from us that we cater so much for swingers and we do not cater for people who do day trading or intraday or scalpers and the rest. No, that's not true. It's just that we don't do them practically. We don't do a lot of examples and practice on day trading, but the approach is the same. I've always emphasized this in videos that we have always made, that the approach is the same. You just have to change the time frames. Okay. Now today I would like to do a breakdown. This is just an example. I'm not going to make the video so long, just to make you understand what I've been saying in the other previous videos, that just change the time frame. Just change the time frame. I've been mentioning that a lot if you've been keen. Okay. So I've been saying that instead of starting from monthly, weekly, and daily, you can shift your time frame and say that you want to start from daily. For example, if you want to do like a short-term trade, let's say for a few hours, you can just shift the time frame. So instead of starting to mark from monthly, you can start to mark from daily, so that you have daily, H4, and H1, okay, as your major three. Then you can now use the smaller time frames as your entry time frames. So meaning that you'll have daily as direction, you'll have H4 as a first structure, and H1 as a second structure, okay? Then you'll have a minute 30 entry and a minute 15 entry, okay? This is what most of the intraday traders are using, okay? Day traders, okay? So let's try to do it practically here. Now, instead of starting from monthly, we're going to start from the daily time frame. For example, what do we normally look out for in the monthly time frames? The same thing we're going to be looking at here for direction. Now, looking at how the market was coming downwards from here, of course, you can see the market is making low, lower, high, low, lower, high, low, lower, high, low. Okay, this is a foreign body here, or what you guys call an order block. So it's one thing we're going to be marking. Then we had the market that lost momentum here, broke above this area. So we're just going to mark those levels so that there will be the areas we're going to be focusing on. Okay, now let's start by marking what we have identified here as our order block, or what you call a foreign body. This is like a wall that the market has built here. Okay, let me just change the color to this. Okay, now then the second observation we have made is that when the market came and made this high here, it was holding price. Okay, you can see it held price here. From here, price was rejected, price came back, it was rejected, the same thing, rejected, the same thing. Then finally we broke above, and then now we are above, price is above this area here. But now in the process of breaking it, you can see price closed above this area here and then came back and retested it, meaning that also we have some level slightly above this area here. We have a level slightly above here. Okay, so I'm just going to remove this so that we have few levels and a clean chart. Okay, so we have this level. Now remember, we're targeting this. We have this upper level which is acting as a resistance. Why? Because it is above current price. Then this is acting as a support. Why? Because it is below current price. Okay, this is our support, current price, resistance. Hope that is very clear. Just a recap on support and resistance. Now we now clearly know that we have broken a resistance, a previous resistance level. Remember, we had this level, we broke above, retested. Now we have broken above. What we expect? A retest. Then we continue to come and retest this area here. Okay, now you clearly have a direction. We need a retest, then a continuation up. But also the market can break below retest and then continues. So you have to be keen. Most of the rules have to happen before you say that I'm going to be expecting a move up or a move down. So you don't have to just guess. Okay, but now our anticipation is that we need a retest here and a push up. Why? Because we have a break of resistance which has now become support. Okay, so now what do we expect to see on a retest here? We expect to see a weak retest according to the rules of break and retest. Now let's go to the first structure time frame that now we have, which is H4. Of course, don't always forget to adjust your levels. For example, here we can adjust this slab so it's there. Then this one can remain the same. We can just leave this as the same, the way it is, or we can just, if you want, you can just want to adjust it just like this. Okay, just like so, it's not so big. Now remember, this is your first structure time frame, and we say that we have just broken a resistance area. You can clearly see it was a resistance here, resistance here, resistance here, resistance. We have broken above. Now we expect the market to come and retest, then we push up. Now remember, these are our levels in the bigger time frames. Now daily H1, H1 are bigger time frames. Okay, so we expect a retest here before we can target this area as we saw in the directional time frame. The first structure confirms that. Okay, of course, now if you want, you have to also to mark the turning point that you've been given here by H4. So you have that turning point and this highest point here. So that it can be a minor threat or another level for you to take entries. So if the market turns from here and comes here, then when it breaks above, you can decide to add entries here, and then you continue like this. Okay, you expect that this is the market making a high, higher low, like that. Okay, so that's why I've added this level here. The same thing we have been doing, but Just we have changed the time frames. Now let's go to our second time frame for our structure. Now also when you come to H1, you can clearly see it's the same thing, just that the more you go to lower time frames, there's more noise, okay? So let's go and focus on the current price. Now, what do we want to see? We want to see price coming while trending to touch this area here. Now, we shall be interested so much in how price approaches this area because it is going to be telling us whether the retest. Remember, in a bigger time frame, in our big time frame daily and H4, we have a breakout, okay, especially in daily. But now I want to see a week retest. So the week retest can be seen where we're going to take our trade from. How do we see the week retest? We want to see the market trending towards this area here. Now, we do not take trades if the market does not touch our area of interest. Our areas of interest are which ones? We have this area and this area up here. So we can only take a trade if only the price comes and touches here, or it comes and touches here, okay? Now, what have we been doing? We have been aligning daily. We have been aligning H4 and then H1. Wanted to see if they're communicating the same thing. Now, daily says that we had a break, we expect a retest. H4 says we had a break, we expect this retest. The same thing we're seeing in H1. We had a break of this area here, which we have not yet touched here, okay? I know price is sometimes going to confuse you. It moves what? Don't focus on that. Let's focus on the levels that we have marked in our structure time frames. Or in this case, structure and direction time frames, which we have as daily, H1, H1. The usual way we have been doing it has been monthly, weekly, and daily. Now, if you mark levels in these time frames that you're using for direction and structure, the moment price does not tap them, there is no trade for you. Okay? Learn how to sit on your hands. Are we together? So in this case of New Zealand USD, in case price does not come and tap into this area that we have marked, that we have broken, and we expect a retest, we shall not take a trade. It should either touch here or it should continue to come and touch here. Then those who trade reversals can look for opportunities to come and tap the levels that we have marked. Does it make sense? Okay. If you mark levels in the 3 time frames that you've chosen, it can even be different from daily, H1 and H4. You can choose any time frame of your choice. I'm making this video because I don't want you to cram that it has to be monthly, weekly, daily. That's why I'm using daily, H1, H1. You can even use any of your choice. If you're a scalper, you can even start from H4, H1, minute 30. Because scalpers, I'm told some of you go up second time frames, minute 1. Though I wouldn't recommend those very tiny time frames as they're not so accurate and there's a lot of noise. But if you're very good at them, the end point is making money, okay? And also you have to have rules that you follow. Whatever we're teaching you here, you can apply to every time frame, whatever security you want to trade, stocks, Forex, futures, if you want to trade cryptos, it's up to you, okay? So back to the point that I was making, that if the price does not touch this area here, you don't even need to look at the other one, that we have a break, then how is the retest? Now, since we already have the break, we want it to come and touch it. Now, the moment it touches here, we want to see how has it approached this area. That brings us to the last point of change of trend and confirmation. Now, change of trend, we have to see that the market is trending downwards, okay? Why are we looking for it to trend? Because we shall use this trend to help us determine if they have stopped going down to start pushing higher. Now, when it starts that, then we can take our buys, since we're looking for buys, to target this area here, okay? So we want to see the market trending downwards. Now, in this case, since we've used daily as our direction, now we have a structure in H4 and a structure in H1. So meaning you're going to skip one time frame if you're using H4 as your structure, but all the structures now are speaking the same thing, meaning here your entry time frame will be minute 30. The moment we touch this area here, you can go to minute 30 and look for if the market is trending lower low, lower high, lower low, lower high, lower low. The moment it touches here, you'll be looking for it to stop making lower lows and lower highs. The moment it starts making higher highs and higher lows, the moment the first time it prints a higher high and a higher low, then you start looking for a buying opportunity. Now, in this case, if you're going to use H1 as your structure, meaning that your entry time frame is going to be minute 15. So in this method, in this way I've showed you, if you start from there, meaning that your entries can be minute 30 or minute 15. Now, if you're to go back to the importances of time frames I taught you, it means that these are the series of time frames that you can use for intraday or even scalping. Okay, so those who have been having issues and questions about how the time frame is big, or we don't forget about intraday guys and day trading guys, no, that's not true. I've always mentioned it that personally I'm a swinger. I love swinging, but you can use the approach that I'm showing you guys to your advantage in whatever time frame that you're comfortable with. You can backtest. There are very many tools. We have tried to bring to you tools, and these are free tools. Okay, some of them may be paid, but if you're not making money from the market, use free tools. For example, these are free tools. Of course, they have paid versions. Just go to our website, APN Academy, Academy with K, stroke tools. Now, these are free tools, backtesting tools, journaling tools. These are tools that we use, okay? If you're not yet making money from the market, trading is a business. You can't start unless you're just willing to invest some money in yourself at the start. But if not, there are free versions. Make sure you backtest, use those free tools, backtest, and see if the things we're showing you are working for you, okay? If they're not working for you, you can check other methods that are that you're compatible with and will be working for you, okay? So use these tools. We have charting tools like TradingView, FASTBULL, and the rest. These are all free tools. Of course, paid versions are available, but I recommend start with free tools so that you can see how the strategy is or the method of trading is. Then when you backtest and you feel you're ready, switch from demo account to real account. Some people don't want to use demos. They usually deposit your money or they buy funded accounts to practice. Now, when you feel you're ready, you can now put your real money or buy another funded account so that you can start trading, okay, for profits or to write down the rules perfectly and the rest, whatever reason that you'll be having, okay? So that is it. In case you have any other questions about the issue of time frames, I just wanted to make a short video. I hope it is really short about that issue because it has been coming a lot. Almost every day we receive something about it. You don't speak about intraday, you don't speak about this, you're always talking about swinging and the rest, okay? The method is the same. I just wanted to do a practical approach to it. I hope it makes sense. Have a great week.